Today is October 28th, 2025, and Beyond Meat isn't trading anymore. It is beginning to decay. And the stock is under the $2 handle, down over 90% from its all-time highs. And what's left of this chart looks like a carcass on the side of Wall Street's highway. And we're looking at a parabolic collapse, a capitulation, and maybe, just maybe, the setup for the last dead cat bounce before it flatlines for good. And after spiking towards the $8, near the $8 handle here in October, during a full-blown short covering frenzy, Beyond Meat crashed right back down to $2, where that erased almost everything. But if you look closer, the selling pressure isn't accelerating anymore. Each new low has attracted less volume, and that's how bottoms sometimes start. Not with full-blown euphoria, but with exhaustion. For if the bulls lose this descending price support level in confluence of the $160 handle, there could be nothing left but air and whatever's left of this ticker tape. But here is where it gets brutal. The new slope across the mid-August lower high and the late September retest highs hits almost this institutional geometry perfection. It is no longer interpretive. It is a surgical, clean, descending price resistance level where every bounce beneath the line was a stop-run trap. Call it a liquidity bait for the hopeful here. If and when bulls were to take out the 240 handle, that could give its hope zone on a solidified green candle close breakout above, which would be the first algo scalp zone where belief could potentially return just long enough. Then the first target at the 280 handle is the liquidity bluff, where bulls will think they are gaining control here on a nice T1 target hit. And the 350 narrative reversal will be the next target, where shorts will begin to back off, only to reload up much higher. And then ultimately, the 420 handle will be the final deception rally before a potential collapse. But as if we're sitting now at the $1.98 handle, the 160 goes with the solidified breakdown, clean red candle close breakdown below. And that would increase the odds that we are heading down much lower. Whereas the 240 mark for 21% and move to the upside, 280 at a 40% in gains, 350 for 78%, and if things get exceedingly bullish, 111% in gains to the upside, hitting the 420 mark. RSI is finally starting to neutralize here. After being buried in the dirt here for weeks on end, and that is starting to churn to the upside. MACD is completely starting to curl back up, with stochastics showing little signs of life, with maybe, just maybe, a pulse where there could be a twitch of a dying trend, where volume's thinning out too, which often means one thing: the shorts are beginning to get lazy. And that's when you want to get those violent little squeezes out of nowhere, deflecting off of this price support level. And if the wedge holds and we take that 240 handle out, you might see a face ripping short squeeze. If 180 or 160 is taken out with conviction, this turns from a bad trade into an obituary, where the 50-cent handle could ultimately have a unfilled and unchecked gap down below, becoming the road marker's junkyard. Again, this is not a recovery story. This is a desperation pattern. Beyond Meat is no longer fighting for its market share. It's fighting for a heartbeat. Traders and investors and short sellers are circling the wedge like vultures, waiting for movement. And the next leg decides whether it becomes a meme resurrection or permanent delisting countdown.